Hello traders, and welcome to the Market Open Preview brought to you through FXCL Excellence in Trading. Today is April 18th, 2014, and it's great to have you with me today. Let me introduce myself to you if you don't mind. My name is William K. Gilday, and I'm a professional Forex trader from 2006. I retired in the United States in 2008 from the Fire Rescue Department in the lovely state of Florida, and I have moved to the great country of Thailand. So it's great to be with you today. So we're going to take a look at some charts today and some analysis and some trade plans. But however, before we get to that, let's take care of the legal stuff and let's go over the risk disclaimer. This is our risk disclaimer. Remember that Forex trading has large potential rewards, but also large potential of risk. You must be aware of the risks and be willing to accept them in order to invest in the Forex market. Don't trade with money you cannot afford to lose. Traders do not trade your rent money. Okay, so we're going to look at two pairs today. We're going to look at the Euro USD and we're going to look at the Aussie JPY. So let's get started and let's get to the charts. All right, traders, this is the Euro USD and this is the daily chart. And as you can see, traders, this pair is in an uptrend. So I am biased and I'm only looking to take this pair for longs. If you take a look at the bottom of the chart, you can see at the 200 EMA, which is the green line, that those four candlesticks actually don't touch the 200 EMA, but they react to it. That's close enough for me. And it reacted to it, went long, stayed long, it's come back, it's made its pullback, went back up again and almost took out the high, and then is now pulled back to the center Bollinger Band, which you all know is the 20 SMA, simple moving average, and now for the last 2 days we have seen higher lows. So let's go and take a look at the hourly chart. Traders, this is the hourly chart, and you can see that prices again reacted to that 200 exponential moving average, which is the green line on my chart. So you can see where I fibbed it with the dashed gray line, took it from that high to the bottom. You can see we had two candles to the right, two candles to the left on both sides, saying that that was a confirmed high and a confirmed low. So now I'm looking at price sitting at a fib level, but it's ranging. It is absolutely ranging. The other thing that we need to look at are the Bollinger Bands. The upper Bollinger Band is curled to the downside. The center Bollinger Band is curled to the downside. And the lower Bollinger Band is curled to the upside. So therefore, I'm still looking for my trades to go long. However, I'm not going to trade on the 1 hour chart. So we need to go down to the 15-minute chart, traders. So let's take a look at the Euro on the 15-minute chart. Traders, I know the top of the chart says it's a 1 hour chart. Trust me, it is a 15-minute chart. That was a typing error by myself. I did it. Yes, I do make mistakes, but that is a 15-minute chart. And this is the trade plan. We can see that price is in a range, and it is what I would call at resistance. So I am looking for price to come back down to the 50% 618, which is that squared in box with the magenta arrow to the upside, and I am willing to take this long. I want to take it long, and I wanted to take it to 38.58. Where's our stop got to go? I would put the stop below the 200 exponential moving average, which is the green line on the chart, and that is where our stop needs to go. And then we're just going to take profit as we go. You know, I'm a price scaler myself. I like to scale out of my trades. So at certain levels, I will take that. Once it pulls back and it comes back up to this resistance level, and if you look left of the chart, you can see that price area has been substantial, and it's always reacted at that price. So, and that is at the 161.8 Fibonacci area, where we want to take profit, and that's at 38.58. So if we come back down on the chart, and we can see where price is now, that area is resistance, but we wanted to pull back, go into our yellow box there, and then take it to the long side. And our risk to reward management is great. There's no problem with that. So that is the euro dollar trade plan. And yes, traders, that is a 15-minute chart. It's not a 1 hour chart. Okay, let's go over to our Aussie yen, and this is the daily chart. And on the daily chart, we're in a range for like the last 2 weeks of trading. We got about over 10 candles in that range. Look at those Bollinger Bands. Look at how they're curled at the top. They're curled at the bottom. Very, very interesting. So that is saying we might stay in this range for a while until these Bollinger Bands opened up. What's going to cause the Bollinger Bands to open up? Volatility. So we need volatility in the market for these Bollinger Bands to open. All right, let's take a look at the 1 hour chart, traders, on the Aussie yen. If you are trading the 1 hour chart, this is your trade setup. Again, we're only looking for long trades on the Aussie yen. We're going to stay with the bias from the daily chart, and we want to take it long. So I've placed this slide in the show, the old slideshow, approximately 1 hour ago. So price is pretty close to where we're at. And we're looking to take this long. So I would be looking for a bullish candlestick formation and take this to the upside on the 1 hour chart if you're trading 1 hour candles. Remember, if you're below the 200 exponential moving average, which is the green line on my chart, just be aware of that. If your candlestick formation happens underneath that, that is now going to be significant resistance. Okay, the other point I want to make out is the lower Bollinger Band. It is exactly on top of the 200 exponential moving average. And the golden rule, traders, is if price comes outside the Bollinger Band, there's a 99.99% chance that price always, always, always comes back inside the Bollinger Band. So that's a trade setup on the 1 hour chart. All right, let's move over here to the Aussie yen 15-minute chart. And this is our 15-minute chart. And this is the trade setup that I'm looking for today, traders. And again, we're looking for long trades from our bias from the daily chart and the 1 hour chart. And here we are at the 15-minute chart. And we're looking at price right now. And you can see where my magenta arrow is to take it long. I'm looking for a bullish candlestick formation, and I will take this to the long side. And that's what I'm looking for. And that is at the 50% fib, and I would place my stop below the 382 Fibonacci level. And we would take that long. Okay, traders? So now you have the trade plans on all 3 time frames. And we now sit and wait, because that's what we get paid for. We get paid to wait. So we're going to sit and wait for price to come to us, the candlestick formations to come to us, and then we will take the entry on both those trades if they come to our conjuncture of what we're looking for. Okay, so now let us take a look at the news watch for today. Traders, this is what's going on in the news today. The Eurozone during the London session has German PPI month on month. Before the New York session, we have the Canadian dollar having core PPI month on month from Canada. That is high impact, and so is the German PPI month on month, high impact. In the US session, we have initial jobless claims. That is high impact. And probably the most substantial trade for today, traders, is the USD Philadelphia Fed Manufacturing Index, which is high impact. And I think that is the big one for today. Well, traders, thanks so much for being with me. It's been a pleasure. Trade safe, trade smart, don't chase price, and enjoy your trading day. Till next time, traders, take care, and bye-bye.